Hello fellow traders. Today we're going to review short squeezes and what patterns to use to spot them. Today we're going to get into best patterns to spot short squeezes by a pajama trader. Give this a like and subscribe, and let's get into it. Introduction to short squeezes. A short squeeze occurs when stocks that are heavily shorted suddenly experience rapid price increases. The surge forces short sellers to buy their shares to cover their positions, and which in turn pushes the prices even higher, creating a cascading effect of buying volume. Recognizing the technical and fundamental patterns that precede short squeezes can enable traders to anticipate sharp rallies and position advantageously in the market. Let's begin by understanding what a short squeeze is and why it matters for traders. A short squeeze happens when investors have lost a bet against a stock, short sellers, are forced to buy shares to close the position as the stock price rises sharply. This buying pressure pushes the price even higher, creating a rapid rally. And recognizing the signs before the squeeze gains momentum, and that's what separates successful traders from the rest. Common patterns to spot short squeezes. Here are some patterns that helps to spot potential short squeezes. Breakouts above well-established resistance levels accompanied by high volume provide a strong signal that short sellers may be forced to cover. Classic reversal patterns such as double bottoms or inverse head and shoulders often indicate trend shifts that trigger squeeze activity. Additionally, volatility contradiction followed by expansion like Bollinger Bands narrowing, then widening, the squeeze play, signals potential explosive price moves. Fundamental confirmation via high short interest and high days to cover ratio strengthens the case. Sudden volume spikes coinciding with price increases are key to confirming a short squeeze is underway. Now let's dive into chart patterns and signals that often precede short squeezes. One indicator is the breakout above a well-defined resistance level on noticeably higher volume. This tells you that shorts might scramble to cover. Look for classic reversal patterns like double bottoms or inverse head and shoulders, which highlight potential trend reversal. Another powerful technical cue is volatility. Contradiction followed by expansion, often visible through indicators like Bollinger Bands, squeezing tight before the big move. And importantly, these technical patterns are much stronger when combined with fundamental data, namely high short interest percentage and long days to cover ratio. Practicing reading these signs will strengthen your ability to anticipate when the short squeeze might be forming. Hertz, the case study spotting the short squeeze in the pattern. So I wanted to go over this short squeeze of Hertz. Looks like on the 14th, we started gaining on some, actually it sold off, and the average volume at that time was roughly about 7 million. Then the next day after that, it looks like on the 16th, the volume started picking up like 3 times the average. And what typically happens there is it pushes the short sellers to eventually sell and keep the price higher. So what happened here was you had a surge of volume here, shorts probably doubled down and continued here, and you see this volume spike. Some of the shorts got out, but then the next day where it traded lower volume than the previous 2 days, you can see that you have this red candle here, basically the sellers getting out, and then this one basically covering. So essentially this is the squeeze, and that's the setup. Starts with the lower volume or average volume, then comes in with some ridiculous amount of volume, and then the squeeze is happening while buyers are coming in and sellers are getting out, having to buy the position at market value and causing a continued spike. So then you see further momentum happening from here all the way up to about $9. And then you see that it starts to return back to its average volume on these days. And then you see it start to fade back down to some of these lower levels. The Hertz chart shows a dramatic price spike from roughly $3.50 to above $9, reflecting intense buying pressure. This price surge coincides with significant volume spike, which is a distinct hallmark of short sellers being forced to buy shares to cover positions. The large volume spike acts as a pressure valve release, marking the climax of the short squeeze. Furthermore, expanding price volatility followed with the tight trading range. Typically classic short squeezes explosion. Let's put the theory into practice by examining the Hertz chart, like we just previously did. The significant short squeeze event that happened, and notice how the stock price jumped from 350 to well above 9, accompanied by a sharp spike in trading volume. This volume spike is a telltale clue that short sellers are rushing to cover their positions. You can also see the price volatility expand dramatically right after the period of tight consolidation. Classic short seller squeeze behavior. By studying charts like this, you can learn to connect volume and price action to real-world trader psychology and market dynamics, thus improving your timing and confidence in trading setups. Key takeaways. Traders looking to identify short squeeze opportunities should monitor for breakout price levels that occur in tandem with volume surges, as these often indicate forced short selling or short covering. It's important to confirm these setups with additional data such as short interest levels and days to cover ratios exceeding 5 days, highlighting the stock's vulnerability. Being vigilant in volatility contradiction and sudden expansions can alert the upcoming explosive moves. Furthermore, tracking option activity in relevant news or news catalysts or events can add layers for confirmation. In Hertz's case, it exemplifies how volume and price surge patterns serve as practical signals for spotting and trading short squeezes. To summarize, spotting short squeezes require a combination of sharp technical analysis and awareness of key market metrics. Watch for these breakout levels with volume surges as your initial alert. Confirm the setup by checking the short interest and days to cover to ensure enough short sellers are potentially trapped. Keep an eye on volatility patterns and option activity as supplementary clues. Also, stay aware of news or catalysts that could trigger or intensify the squeeze. Practice these techniques and it will help you identify actionable opportunities, just like we saw in Hertz, and avoid getting caught on the wrong side of sudden moves. Thanks again for watching.